Hello and welcome to our Q1 2012 Global Capital Flows presentation. My name is David Green-Morgan, Global Capital Markets Research Director at Jones Lang LaSalle, and today I will be presenting the results of our Q1 research and looking forward to what the remainder of 2012 has in store for us. A note at the outset that all figures quoted in this presentation are in US dollars. In the first quarter of 2012, we have recorded $77 billion worth of commercial real estate transactions. This is a decline on both a quarter-on-quarter and year-on-year basis of 31% and 21% respectively. The decline on a quarterly basis is exacerbated by the fact that an extra $10 billion worth of deals were added to the Q4 2011 numbers, making it the second most active quarter since the financial crisis, and 2011 the fourth most active year on record. Despite the more subdued start of 2012, there were still some very interesting trends. Domestic buyers dominated in the first quarter, accounting for over 60% of all transactional activity, reversing the trend of 2011 when we saw cross-border buyers regularly over 40% of all transactional activity. In particular, European buyers were practically non-existent outside of their home markets, while inter-regional flows to Asia Pacific were below $400 million. Unlisted global funds sold twice as much as they bought, reducing their exposure to commercial property by $5.5 billion. Conversely, REITs were again very active purchasers this quarter, continuing the trend they established in 2011 with office and retail the favoured sectors. One of the more notable trends of this quarter was the increase in purchasing activity into the logistics and industrial sector. Industrial assets globally secured 15% of all transactional activity, well up on its longer-term trend of around 12%. As yields in the core prime office and retail markets have compressed over the last 2 years, so investors have started to look at the higher yielding opportunities in the industrial sector and in logistics in particular. Japan highlighted the trend with a couple of large logistics portfolios being sold to Singaporean investors this quarter. Regionally, the Americas had the most encouraging start to the year with only a small decline compared to a year ago. Brazil was the only country to show an above average decline, but that was due to a very active first quarter of 2011. All other countries gained, with the US up 15% and Canada up by over 50% year on year. In Europe, the end of favourable tax arrangements in France at the end of 2011 led to many deals being brought forward with an inevitable drop-off this quarter. The UK and Germany also experienced a quieter start to the year. Japan was the standout performer in Asia Pacific, with volumes over $8 billion for the second successive quarter. Most of the markets declined, bringing the overall regional volumes below $20 billion. Despite the quieter start to 2012, we are keeping our full year 2012 forecast steady at around $400 billion. Investors remain focused on executing their strategies, albeit with longer transaction times and additional due diligence. With prime property now having repriced, we believe investors will look at the multitude of opportunities in secondary markets to underpin transactional activity. For 2012 to surpass 2011, we would need to see a significant improvement in debt availability globally, combined with an improving economic outlook. Well, that's all from me, and I look forward to bringing you the Jones Lang LaSalle Global Capital Flows update next quarter.